Hello viewers, welcome to my channel. I am Hasham. Now I am continuing the problems on income from house property, computation of income from house property. Already 4 problems I have completed in the previous videos. So before that I have given the complete explanation regarding the provisions of how to compute the income from house property. Hope my viewers, my regular viewers have already watched that theory video. And also the last 4 problems you have watched, you got the idea how to compute the income from house property. So if you are first time on my channel, I suggest you to visit the playlist of my channel. I have uploaded so many subjects videos like financial accounting, advanced accounting, cost accounting, corporate accounting, and income tax, business statistics, financial management, investment management. So many videos, so many subjects videos I have uploaded. Select your subject, select the topic, watch the video and increase your knowledge on your field of study. Now, before starting the next 5th problem, I expect my viewers to have the printout of the problems which I have given in the link under my description. So go to the link, take a printout and keep it ready before watching the problems on computation of income from house property. Now 5th problem I am reading out, see carefully. Sri Raju purchased a house from Sri Akash. The registration of the house is not yet completed, but the house is let out on a monthly rent of 6,000 for residential purpose. The new point in this problem is Sri Raju have purchased the house, but the registration is still pending. The registration process is not yet completed. But Raju got the possession. Raju got the possession and he has let out the house also. In this case, Income Tax Act says he is not the legal owner until and unless the registration is in his name. Till the time registration in his name, he is not the real owner, legal owner. But from income tax point of view, he is deemed to be a beneficial owner because he will be treated as a deemed owner because he got the possession. He purchased the house, got the possession, but still registration process is pending. So he is liable to pay tax on this income. Now municipal rental value MRV is 20,000 per annum and the rent of similar building FRV is 5,000. During the previous year, the house was vacant for 3 months. This is the new point first time we are coming across. The house was vacant for 3 months during the 12-month period. During the 1-year period, 3 months the house was vacant, no tenant was there. So vacancy allowance. This vacancy allowance will be deducted from ARV. So ARV will be calculated by taking the rent of 12 months minus vacancy allowance. Under the agreement, the tenant paid municipal taxes 4,000. So according to the agreement, the tenant has to pay municipal taxes. So municipal taxes deduction will not be allowed. Municipal taxes deduction will be allowed only if it is paid by the owner. If it is paid by the tenant, municipal taxes not allowed. Then interest paid by the owner on the loan taken to repair the house allowed, 2,500 allowed as deduction. Calculate the income from house property for the current assessment year. So 1 or 2 new points are there in this problem. The first point, the owner Mr. Raju is not the legal owner, but Income Tax Act will treat him as a deemed owner because he got the beneficial ownership. He got the possession and he has let out the house. He got the income from the house, but still pending registration. That is the new point. Second new point is there is a vacancy allowance of 3 months. Now what is the procedure? Computation of income from house property of Sri Raju for the assessment year. Gross annual value GAV less municipal taxes. Net annual value deduction under section 24. Standard deduction under section 24A. That is 30% of NAV and interest on loan taken to purchase, to construct, to repair, to renovate, to reconstruct the house. Now we will see the adjustment. Working note number 1, non-registration of house. The house is not yet registered in the name of the owner, SSC. SSC is not having the ownership legally, but he is enjoying the beneficial ownership. Hence, he will be treated as a deemed owner. According to the provisions of Income Tax Act, he will be treated as a deemed owner, just like owner, and he is liable to pay tax on the income from house property. Even the registration is pending. Now ERV. The main complication is you have to calculate the GAV. So GAV will be calculated under different circumstances and some new points are there. In the previous problem I told you GAV will be calculated. First we have to see whether it is covered by Rent Control Act or not. If it is not covered by Rent Control Act, simply take the higher of the three. MRV, FRV, ARV. The higher of the three is the GAV. If the house is not governed by Rent Control Act. If the house is covered by Rent Control Act, then three steps. First calculate ERV. Second calculate adjusted ERV. Third calculate the GAV. If the house is covered by Rent Control Act. But in this problem, the house is not covered by Rent Control Act, but there is a vacancy allowance. There is a vacancy allowance. Now what is the new point? I'll show you. ERV is higher of the following two. First of all, we calculate the expected rental value, ERV, higher of MRV, FRV. MRV is 20,000 and FRV is 5,000 into 12, 60,000. 5,000 rupees per month given in the problem, 60,000. Higher of these two is the ERV. So ERV we got 60,000. Now we have to calculate ARV. ARV is equal to rent for 12-month period minus vacancy allowance. The monthly rent was 6,000 given in the first line of the problem. Actual rent is 6,000. 6,000 into 12, 72,000 minus 3 months vacant. The house remained vacant for 3 months. So 6,000 into 3, 18,000. 72 minus 18, 54,000. Actually ERV we got 60,000. Whereas ARV we got 54,000. Why we got 54,000? Because of vacancy allowance. If there is no vacancy allowance, the ARV would have been 72,000, which is more. 72,000 rupees is more than ERV. We would have taken 72,000. But ARV is less because of vacancy allowance. Because of vacancy allowance, ARV is less. How much it is? 54,000. So according to income tax provision, if ARV is less than ERV on account of vacancy allowance, then ARV is the GAV. ARV is the GAV. How much is the ARV here? 54,000. So GAV is 54,000. ARV 54,000 is less than ERV 60,000 due to vacancy allowance only. Only on account of vacancy allowance, this is less. 54,000 is less because of vacancy allowance. That's why GAV is 54,000. Municipal taxes not allowed as deduction because it is paid by the tenant. 54,000 NAV. 30% of 54,000, 16,200. Then interest on loan taken 2,500, total 18,700. Subtract 35,300 is income from house property. That's it. Or the only new point is here, vacancy allowance. On account of vacancy allowance, ARV is less than ERV. In that case, ARV is the GAV. That is the provision. New point. First time we are coming across. Now, next, sixth problem. From the following particulars, compute the income from house property of Srimati Madhavi. Municipal rental value, MRV 60,000 per month. FRV, fair rental value 65,000 per month. Standard rental value 58,000 per month. This house is governed by Rent Control Act because standard rent is given. Previous problem, standard rent was not there. Then actual rent per month 66,000. Municipal taxes 10,800. Vacancy period 1 month. Again, just like the previous problem, here also we got vacancy allowance 1 month and unrealized rent 1 month. So two things are there, vacancy allowance and unrealized rent. Both should be deducted for calculating ARV. For calculating ARV, take the rent for 12-month period minus vacancy allowance minus unrealized rent. Then fire insurance premium, ignore, no deduction will be given for fire insurance premium. Interest on loan taken to repair the house, this will be allowed as deduction under section 24B, 3,58,000. That's all. So here only the new point is, the house is governed by Rent Control Act, and secondly, vacancy allowance and unrealized allowance both are given. That is the new point. Now see, computation of income from house property of Sri Madhavi for the assessment year. Gross annual value GAV we have to calculate. Municipal taxes Net annual value, deductions under section 24, standard action 24A, 30% of NAV, interest on loan under section 24B, loss. Here we are getting, no, not loss, it is income from house property. Income from house property. Now, working note, concentrate on the working note. GAV. For GAV calculate करने के लिए we require 3 steps because the house is governed by Rent Control Act. So 3 steps. First, ERV is higher of the following two. Always ERV will be higher of the following two. MRV, FRV. MRV is 60,000 per month into 12, 7,20,000. FRV 65,000 per month into 12, 7,80,000. The higher of the two is the ERV. 7,80,000 is the ERV. Second step, adjusted ERV. Second step, you have to calculate adjusted ERV, which is lower of the following two, which is least of the following two. So calculating adjusted ERV, which is least of the following two. ERV. How much ERV we got? 7,80,000. SRV, standard rental value, 58,000 per month given in the problem. 58,000 into 12, 6,96,000. The lower of these two is the adjusted ERV. The lower is 6,96,000. So 6,96,000 is the adjusted ERV. Then calculating the ARV. So ARV is equal to rent for 12-month period minus unrealized rent minus vacancy allowance. 1 month is the vacant period, 1 month is the unrealized rent. So 66,000 into 12, 7,92,000 minus 1 month vacancy allowance. So 1 month rent is 66,000. 66,000 into 1. Similarly, 1 month is vacancy allowance. Unrealized rent 1 month, vacancy allowance 1 month. So 66,000 into 1. So 7,92,000 minus 66,000 minus 66,000, 6,60,000. Now you compare it. ARV is 6,60,000, whereas adjusted ERV is 6,96,000. Now compare these two. Now a new point, one more new point. ARV is less than adjusted ERV not only on account of vacancy allowance but also on account of other factors like unrealized rent. Here ARV is less. Definitely ARV is less, 6,60,000. Less compared to 6,96,000. If you compare adjusted ARV with adjusted ERV with ARV, ARV is less. This ARV is less not only on account of vacancy allowance but also on account of other factors. The other factors are unrealized rent. In that case, what will happen? Like hence, GAV is equal to adjusted ERV. In this case, gross annual value is GAV is equal to adjusted ERV. What is the adjusted ERV here? 6,96,000. You should not take ARV. Here in the previous problem, ARV was less, but only on account of vacancy allowance. ARV was less only on account of vacancy allowance. That's why ARY itself is the GAV. ARY itself is the GAV. But here in this case, ARV is less not only on account of vacancy allowance but also on account of unrealized rent. So in that case, adjusted ERV is the GAV. Adjusted ERV is the GAV. What is the adjusted ERV here? 6,96,000. The GAV is 6,96,000. Minus municipal taxes 10,800, subtract 6,85,200. 30% of 6,85,200, 2,05,560 plus interest on loan 3,58,000. Take the total 5,63,560 minus 1,21,640. This is the income from house property. So fire insurance premium not allowed as deduction because standard deduction is given. That's it. So this 5th and 6th problem I have completed. In these two problems you have seen the difference. When vacancy allowance is there and vacancy allowance and unrealized rent is there. So how to calculate GAV when vacancy allowance is there? 5th problem. Only vacancy allowance. Here vacancy allowance is there and unrealized rent is also there. Then how to calculate GAV? I have explained in detail. So this is the end of problem number Now we'll start the next problem, problem number 7. Sri Arun Kumar owns 2 houses used as residential purposes. So both the houses he is using as self-occupied residence purpose, not let out. During the previous year relevant to the current assessment year, the following particulars are furnished. Compute the income from house property. House number 1, house number 2. Municipal rental value, MRV is given 4,50,000. Rent of similar building, FRV, fair rental value, 3 lakh and 3,75,000. Municipal taxes 4,000, 4,500. Loan taken on 1st June 2019 for repairs, 2 lakh, 4 lakh, rate of interest 12%, 10%. Now, this is a new problem. In this problem, both the houses are used for self-occupation, self-residence, not let out. So according to the provisions of Income Tax Act, the annual value of self-occupied house will be nil for both the houses. The annual value will be nil. So we don't require MRV, we don't require FRV because NAV itself is nil. Net annual value is nil. Municipal taxes are not allowed because we don't require. The net annual value itself is nil for self-occupied house. No deductions are allowed under section 24 except 24B. And a 24A deduction will not be allowed. Standard deduction is not allowed. Only 24B, interest on loan taken for purchase, construct or repair. In our problem, loan is taken for repairing. For repairing, loan is taken. So loan, interest on loan will be allowed as deduction under section 24B. Now, how the solution will be, see here. Computation of income from house property of Sri Arun Kumar for the year 2021, assessment year. Gross annual value nil, municipal taxes nil, net annual value nil, NAV of the self-occupied house will be nil. Deduction under section 24, standard deduction not allowed, nil. Because NAV itself is nil, so there is no standard deduction. Interest on loan taken under section 24B, that will be allowed. But remember one point. Interest on loan taken for repair will be allowed as deduction up to a maximum amount of 30,000. Whether the loan is taken before 1/4/1999 or after 1/4/1999. Because there is a provision, separate provision. If the loan is taken for purchase or construction before 1/4/1999, the maximum limit was 30,000. And if the loan is taken after 1/4/1999, the maximum limit is 2 lakh. But that limit 2 lakh rupees is there only for purchase or construction. If the loan is taken for repair purpose, the maximum limit is 30,000. 30,000 is the aggregate limit for any number, for all the houses, for both the houses. Not the 30,000 on each house, but combined together aggregate exemption will be up to 30,000. Now, for self-occupied house, the annual value will be nil. No deductions are allowed under section 24 except under deduction under section 24B for interest on loan taken for purchase, construction or repair. This is the general provision that for self-occupied house, the annual value will be nil. No deductions are allowed except interest on loan paid, that will be allowed. Now here, interest on loan. Actually, loan is taken on 1st June 2019 and our year ends, our previous year ends on 31st March 2020. So we have taken a loan on 1st June. So how many months? June, July, August, September, October, November, December, January, February, March. 10 months. So we have to calculate the interest for 10 months. So from 1st June 2019 to 31st March 2020 for 10 months. House number 1. Rate of interest 12%. Loan amount 2 lakh into 10 by 12. So it comes to 20,000. So 20,000 rupees is the interest allowed under section 24B for house number 1. House number 2, interest is 10% of 4 lakh. Loan amount is 4 lakh rupees given. Rate of interest 10%. So 10% of 4 lakh into 10 by 12. 33,333 is the interest. But Income Tax Act says the total interest allowed is 30,000 for both the houses, not more than 30,000. 20,000 already we have allowed as deduction for house number 1. So remaining only 10,000 will be allowed for house number 2. Actually interest comes to 33,333. If we calculate the interest, it is coming to 33,333. But limit says up to 10,000 because 20,000 already we have allowed. Aggregate total 30,000 will be allowed. So deduction under section 24B in respect of interest paid on loan taken to repair the house will be restricted to 30,000. When loan is taken for repair, always, whenever it is taken, loan is taken before 1499 or after 1499. 30,000 is the limit. In aggregate, for up to 2 houses, in case it is used as self-residence. Then as deduction under section 24B for house number 1 is taken as 20,000, therefore deduction is restricted to balance of 10,000 for house number 2. So house number 2 deduction will be given only for 10,000. So 20,000 deduction for first house, 10,000 deduction for second house. So loss from self-occupied house, first house 20,000, second house loss is 10,000. That's it. So this is the end of problem number 7. Now see the problem number 8. Mr. Rajesh has a house property in Kanpur. During the previous year, he has occupied the house 4 months for residential purpose and thereafter he has let out on a monthly rent of 11,000. So during the previous year of 12 months, first 4 months he used the house for self-occupied, for self-residence. Self-residence purpose 4 months. Remaining 8 months he has let out on a monthly rent of 11,000. The municipal value is 90,000 per annum MRV and rent of similar building FRV 9,000 per month. Expenses paid by owner, insurance, ignore. Ground rent 10,000, ignore. Interest on loan taken for construction of house 22,000, allowed. Interest on loan taken for construction will be allowed under section 24B. Municipal taxes 10%. Compute income from house property. The new point in this problem is only one house is there of the SSC. SSC is having only one house. That house, part of the year he is using as self-occupied and part of the year is let out. In this case, we have to compute the income from house property as if the house is let out for 12 months. As if the house is let out for 12 months. No need to separately calculate for self-occupied period. For first 4 months self-occupied period, you should not calculate the income. Income will be calculated for the let out period for the whole year. For the whole year. So, computation of income from house property of Mr. Rajesh for the assessment year. GAV less municipal taxes, format I have prepared. Now, during the previous year, the house is self-occupied for part of the year, 4 months, and let out for part of the year, 8 months. In such a case, the income from house property is computed for the whole year, 12 months as let out. So you have to compute the income from house property as if the house property is let out for the whole year, 12 months. Then GAV is higher of the following two. This house is not governed by Rent Control Act because standard rent is not given. So GAV can be calculated by using higher of the following three: MRV, FRV, ARV. MRV, municipal rental value 90,000 given in the problem. Fair rental value 9,000 per month into 12, 1,08,000. And ARV, actual rent 11,000 rupees per month for 8 months. Because he is getting the rent only for 8 months. The actual rent received is 88,000. Now, higher of these three amount is 1,08,000. So GAV is 1,08,000. Municipal taxes. It is given in the problem municipal taxes are 10%. So 10% of what? 10% of MRV. Municipal taxes is based on municipal rental value. MRV के ऊपर depend करेगा. How much is the municipal rental value? 90,000. So 10% of 90,000 is 9,000. So municipal tax is 9,000. So NAV is 99,000. Now standard deduction 30% of NAV 29,700. And interest on loan taken to construct the house 22,000. Total 51,700. Subtract, you will get 47,300 is the income from house property. That's it. So this is the end of problem number 8. So far 8 problem I have explained on computation of income from house property.